Thanks, everybody. We're just going to wait a couple more minutes to see if more people join. Okay, I think we have a good group already joined. So good afternoon, everybody. Hopefully everybody is keeping safe and healthy. See a few waves. Hello.
Hello.
So thanks for joining us today for today's plugged in event. Today we have a few guests from Herrick Feinstein, and one who I'll hand it over to in a second to introduce the other speakers is Yariv Ben-Ari, who is actually CoreNet's legal counsel. And, Yariv has been helping us with several, aspects in CoreNet that also relate to our current situation. So he's definitely, in tune with what is going on. And they also, Herrick Feinstein is a real estate boutique law firm that was established in 1928 and has offices in New York City, Newark, New Jersey, and they represent a host of different clients, owners, tenants, developers, investors, etc. So they do have a group internally that they've assembled that is dealing with the current situation and advising clients on how to deal with things from COVID-19 related issues, including force majeure, employment, insurance coverage, etc. So today's conversation is going to focus primarily on the conversation and the impact of the CARES Act that was released by the federal government. And I will hand it over to Yariv. Thank you.
Thank you, Sheena. Hi, everyone, and thank you for participating today. I'd like to maybe start a little bit about telling you a little bit about our firm, what we do, and introduce my co-speakers. So as Sheena mentioned, Herrick Feinstein is a law firm. We are based in New York. We have a presence in New York, New Jersey, Washington, D.C., in Turkey. We work both domestically and internationally, and are assisting our clients both related to the current pandemic, both locally and internationally, and we'll get to some examples. Incidentally, if for some reason the internet's not working well and I freeze or cut out, just start waving your hands like this or something, and I'll understand that I'm having a technical problem. So Herrick Feinstein, we have about 160 lawyers. We focus on real estate litigation and corporate work, as well as securities work. Our real estate team specifically has about 65 people in its group. We have a transaction, folks that deal in general transactional work. We have folks that deal in economic incentives, zoning, condo work, tax work, environmental work, and each and every one of these items specifically has come into play over the last month or so as we've been addressing this pandemic. Along with me today are Andy Gold. Andy, can you raise your hand, wave your hand so we can see you? That's Andy Gold, and Patrick O'Sullivan. Patrick, can you raise your hand? That's Patrick. Andy is my partner at Herrick. He's been a lawyer for about 30 years. He doesn't look like he's been doing it for more than 3-4 years, but he has a great energy, and he helps owners, lenders, borrowers, and developers work through all aspects of transactional real estate, restructuring, finance, and so forth. Again, Andy and I work on transactions both here and internationally. Patrick O'Sullivan, also my partner. He represents owners, developers, investors, and governmental entities and not-for-profit institutions on a range of real estate matters and focuses on development issues, particularly those that arrive in the public-private transactions. Patrick is the former executive vice president and head of the real estate transactions group at the New York City Economic Development Corporation. He worked a lot with real estate developers to meet their challenges in the public-private sector. I lost everybody there for a second. With that, let's first of all address the major emergency of the day that I had to deal with. Some of you may know tonight is the eve of Passover, and as we were getting ready for this session, my wife said to me, "We don't have macaroons." So I'd like to report to everybody, first of all, that I found the last box of macaroon on the Upper East Side. If anybody would like one, feel free to come to my house over the next 3 days. So emergency number one, covered, and it is sealed, so we don't have to worry about any type of contamination.
Yariv, I've got a box in the closet from last year. I could have sent that up to you.
Now you tell me, is it chocolate or vanilla flavored or coconut?
Always chocolate.
Perfect. So you can now come either to my house or to Andy's house to have some chocolate macaroons, either fresh ones from this year or Andy's from last year. So I'd like to share with you, first of all, a little bit of what we as a department, a law firm, have been addressing to help our clients over the last month, especially over the last week or so. Until about a week and a half ago, when we were wondering what was going to happen in terms of loans and rents, we were strategizing with our tenants, our landlords, and our lending clients to understand what will happen, both in terms of who won't pay, what to do about those who either don't pay or ask for some type of forbearance. We've had many clients that have loans, either balance sheet loans or securitized loans, each one having its own set of methodologies to connect with lenders and servicers to try and figure out what to do in this area. We've been working with hotels and other hospitality clients in terms of how to, on the one hand, some of them have essentially shut down, so how to work through shutting down the hotel in terms of coordinating not just with the franchise and the management company and their lenders, but also dealing with the employment-related issues in terms of giving notices and so forth, and how to address unemployment and insurance-related matter. We have been diligently helping our clients go through their insurance policies to understand what coverage they have or don't have that may be relevant in these circumstances, or how to make sure that they put in, they put their insurers on notice of issues that they're having and how to handle those as well. We've been monitoring closely the various economic packages and benefits that have been coming out by the various governments at various levels, and Patrick will speak a little bit about those as well, and Andy as well, at different levels, and we'll walk you through all of those, as well as some things to look out for and what the outlook looks like. If at any point, this is not meant to be a lecture, this is meant to be a dialogue, a conversation with you. If at any point you have a question, on the bottom of your screen, you'll see that there is a chat button. If you see it, feel free to click on that, and you'll be able to send us a message. Just make sure that where it says to, I believe it goes to, should go to either everyone or Marissa. Marissa will tell me if I'm incorrect about how it works. But if you have any questions, just send them there so that we can see them and get them answered as you ask them. While you're not talking, if you could just make sure you're on mute so we don't get feedback noise, that would be great. With that, I'd like to just kind of jump right into it right away. And okay, so I'd like to jump right away, maybe start with Andy. Andy, can you tell us a little bit about what's been going on in the world of the Paycheck Protection in terms of the CARES Act, what you're counseling clients, what some of the challenges some of them are facing in understanding whether or not they can even meet the requirements, and maybe some thoughts about when people will start seeing some of that money actually come in so that they can use it and help revive their businesses.
Yeah, sure, Yariv. I'll definitely answer those types of questions. I wanted to give an overall view first of what the Paycheck Protection Program is. First of all, you shorted me 10 years on the years of practice. It's almost 40, not 30, but that's okay. And I'm glad that everybody's here. I hope everybody's safe.
Andy, after this month, it'll be more like 50.
It feels like 50 right now. I hope everybody's safe. You might have heard that last Friday, the president signed into law the CARES Act, which is a $2 trillion package of loans and grants, some to specific industries like the airlines industry. Some money is going to be funneled to the Federal Reserve and the Treasury for loans and other programs that Pat will talk about in a moment. But the bulk of the biggest news from the CARES Act, as it involves small businesses and individuals, is the Paycheck Protection Program, which is a $350 billion program. Although I'm sure if you've been listening to the news, that program looks like it's going to be extended by another $250 billion. The Senate is supposed to vote on that on Thursday, but stay tuned. But like this program, since it was first announced a few weeks ago, things have been evolving. There have been regulations that have come out that have modified certain provisions of the statute, and I'll talk about all of that in a second. Also in terms of the application process, what we're seeing from different lenders, because the forms are all not the same, and how the lenders are processing these loans and how long it might take before we actually see some money going into various bank accounts. But the purpose of the Paycheck Protection Program was really specific to provide businesses with funds, with loans that ultimately might turn into grants. In other words, the loans would be forgiven to be used to pay for basically general overhead of a business, payroll, rent, mortgage payments, and utilities. But the primary purpose of the loans is really to pay payroll so that employers do not let people go during these times. Under the program, any business, a small business, can apply for loans in lesser of an amount of $10 million or 250% of their average monthly payroll. You can use either calendar year of 2019, or you can go back a year from basically today. Eligible businesses include basically any type of business, so long as you have less than 500 employees. So they can be not-for-profits, veterans organizations, tribal concerns, which I assume is not applicable here, sole proprietors, self-employed individuals, and also independent contractors are eligible for these loans. Currently, and I think this is going to stay, the loans carry a rate of 1%. Payments under the loans are deferred for no less than 6, no more than 12 months. I've been seeing in the market 6. I've seen documents from Chase, the actual loan documents, which are very, very simple. And they are a 6-month deferral. The loans are repayable within 2 years after the 6-month deferral. Chase is requiring that after the 6 months, the loan is amortized. And then to the extent that there was principal and interest that was deferred during the 6-month period, that would also be due and payable on the 2-year anniversary of the making of the loan. The loans can be used, as I mentioned, for payroll costs, but excluding any employee compensation above $100,000. Interest payments on, as I mentioned, on mortgages, rent payments, utility payments, and actually interest on other debt obligations that might have been incurred before the loan, before the period for which the loan was applied for. However, not all of those categories of expenses would be forgivable under the loan program, and I'll talk about that in a second. The interesting part about the PPP is that there is an exemption to the 500-person limitation, and that is for businesses that are basically in the accommodation and food business. So if you have hotels and you have, I don't know, 10 of them, and maybe you've got 1,000 employees, so long as not one of those hotels has more than 500, even though you have 1,000 employees, you still qualify for this loan. and that was specifically to address the very hard-hit hotel and food industry. The SBA will still look at their affiliation requirements, so that if you have a number of businesses that ultimately are controlled up the chain, and those businesses in the aggregate have more than 500 employees, you would not be eligible for the loan. The amount of the loan is calculated based on, as I mentioned, the previous 12 months or calendar 2019, depending on which is more advantageous to the employer. And basically you take all payroll, which includes salary, wages, other compensation, commissions paid to the employees up to the amount of $100,000. And then you can include on top of that non-cash benefits such as employer contributions to retirement plans, group health care, including insurance premiums, and state and local taxes assessed on the compensation of the employees. You multiply that number by 2.5. If that number is less than 10 million, that's the number you get. If that number is over 10 million, you get 10 million. The interesting thing about these loans is that they can be forgiven to the extent that those proceeds are used in the 8 weeks subsequent to the funding for 4 basic expenses: payroll, rent, mortgage payments, and utilities. However, the forgiveness for rent, I don't know why they take out, and I'm sorry, that's interest on mortgage payments, not the principal. I don't know why they do this just for rent and not for mortgage payments, but to the extent that rent constitutes more than 25% of the amount of money that you receive, you're only allowed to, you're only forgiven for the 25%. It's capped. And the reason for that is, as I mentioned at the beginning, the whole purpose of this statute and this legislation is to provide money to employers to keep their payroll and not fire anybody during the period after the time that they get the loan. So to the extent that you have, you use 100% of the money in the 8 weeks subsequent to the time you get the loan for payroll, that entire amount would be forgiven subject to the following caveat. The loan forgiveness program gets reduced to the extent that your head count during this 8-week period is less than your head count in one of 2 other periods, which again is at the option of the employer to determine what is more beneficial. So the first period of time that the employer can use is the average amount of employees it has from February 15th, 2019 to June 30th, 2019. Or it can use the average number of employees that it has from January 1st, 2020 through December 29th, 2020. And to the extent that the employees in either of those 2 periods, you had more employees in either of those 2 periods than you have during the 8-week period after the loan is made, your forgiveness gets reduced. So for example, if you had 10 employees from January 1st, 2020 through February of 2020, and during the 8-week period you have 5 employees, your forgiveness would be reduced by 50%. There's a similar provision with respect to wage reduction to the extent that you reduce wages by more than 25% during this period. That amount in excess of the 25% would also not be forgiven. But since this is the government, it gets a little bit more complicated. To the extent that you rehire those 5 people that I mentioned, it doesn't have to be the same 5 people, but 5 people on or before June 30th of this year, you would then be able to get the full forgiveness. And the same thing goes for the reduction of compensation. In terms of what happens with the forgiven parts of the loan, it's not, the employer needs to submit an application after this 8-week period. There's nothing in the statute or the regs right now that talks about talks about when that application has to be submitted. Obviously, there'll be documentation that has to go with it, payroll records, any documents that you've sent to the IRS or state income tax or state revenue agencies, payroll, unemployment filings, anything like that, and a certification that what you're submitting is true and correct. The lender has to make a decision thereafter within 60 days with respect to the forgiveness. And any amounts that are forgiven are not considered forgiveness of indebtedness income. And that's the basics of the program. We have been assisting many clients in determining headcount in order to meet that 500 employee ceiling. We have been reviewing applications to many different institutions. As I said, things seem to be evolving as we go along. In fact, the actual application form that the SBA put out originally, and we had clients that were struggling with it because there were some citizenship questions on there that really aren't relevant to this program. Ultimately, again, were modified late on Friday evening. So people are scrambling. I think things are settling down a little bit. I've been speaking with some folks who actually have had their applications filed and approved by the local institution. That's the way it works. You file the application and supporting docs with your local SBA bank. Our recommendation is that you obviously go to a bank that you already have a relationship with. The bank reviews the documentation, reviews the form. They do not do an in-depth financial analysis. They ship it to the SBA. The SBA looks at it and hopefully it clears and you get your funding. I do not believe that the SBA is going to really look very deeply at this either in terms of getting the money out. I think that they will look at it very deeply when people apply for the forgiveness and they have some time to actually look at this stuff within a 60-day or 90-day window, as opposed to trying to get the money out the doors as soon as possible. I don't know if anybody has any questions, but happy to answer.
Andy, just I wanted to follow up on one point you were mentioning. I know this is all very new and there are a lot of regs and interpretations and FAQs going around, but is it fair to say that this was all done very quickly, and if anybody has any hesitation, that should really keep monitoring the evolution of the regs and the interpretations to figure out whether or not they qualify and how this will apply going forward?
Well, I think that if anybody thinks that they're eligible for this loan, if they have any question as to whether they're eligible for this loan, they should frankly, they should speak with their lender. The lenders have been very helpful in taking people through this application. It was, this whole program was done virtually overnight. People are struggling a little bit with it, but we would recommend that you speak to your lender. If you're at all hesitant, if you think you qualify, put your application in. There's no collateral, there's no guarantees required with respect to these loans. If for some reason you weren't eligible, and as long as you didn't commit fraud and you received the money and used it, I mean, the worst that's going to happen, I think, but I have no basis for this, but given the nature of the program, it's just what I think. The worst that's going to happen is you're going to have to repay the loan, and you won't get the forgiveness. Again, as long as there's no fraud involved.
And in terms of, I don't know how applicable it is necessarily to the folks on the call, but given that this, at least at the initial stage, is additional subordinate debt, clearly people should be talking to their lenders to let them know that they're applying for this and they will be taking this on their balance sheet.
Yeah, look, that's a very good point, Yariv. What Pat and I are finding is that lenders understanding that this loan is going to be used to keep the business afloat, which helps the other debt ultimately get paid because the business remains open. and the fact that there's no collateral, there's no personal guarantees, and it could be forgiven. The banks are in our view, certainly not discouraging, and I think they're encouraging businesses to apply for these loans. Because it's better for the SBA to fund these expenses than for businesses to go to their existing banks and ask for increases in their lines, in the working capital lines.
Okay. Thank you, Andy. Again, folks, if anybody has a question, feel free to send it in through the chat. I'm looking at it. I hope I'm doing it right. But if I missed your questions for Andy or for Patrick, again, just raise, do this with your hands, and I'll understand something's going wrong. I can keep doing this, by the way, if people like this throughout, but that's a different thing. Okay, Patrick, tell us what's new and exciting in economic incentives and how that can help us out during this period of time, and what's coming in the pipeline too.
Sure. Thanks, Yariv. I guess first, just to follow up on Andy's discussion, Andy, it's correct to say that initially there were three under the PPP program. There was initially $349 billion allocated to it. The expectation is that is going to be expanded in short order, correct?
Yeah, correct. I think I mentioned it. I rounded up to 350, Pat, but there's another 250 billion that's being bandied about.
And the other thing that's important to note is that businesses were able to start applying beginning last Friday, April 3rd. With respect to the program is also available to sole proprietors and independent contractors, and applications for those types of businesses I think begin this Friday, if I'm not mistaken.
Yeah, that's correct. It was staggered primarily so that businesses that had several employees up to 500 could get the money out first. I don't know. Is Pat frozen?
Patrick, I think you're frozen. Okay, so until we get Patrick back, Andy will be singing us a song. Hold on, let's give him another second. So while we get Patrick back to talk, just to give you a little flavor of some of the things Patrick was going to speak about, and when he loops back in, we'll speak about and tell you how I got it all wrong, is the various incentives that outside of the Paycheck Protection Program that are being looked at the federal level. Some of you may know that the Fed is already committed to buying back at a commercial level, which is, again, less applicable for this call, already committed to buying back some commercial paper and to fund municipality bonds in order to allow everybody to keep working and running their infrastructures in cities. He will talk a little bit about additional programs that the Fed and other agencies are looking to put out there. As well, there have been a few programs that the New York City has put out there. Unfortunately, the 2 or 3 programs that have already been launched by New York City have been closed and are not accepting applications, but they will be coming back. Well, we should monitor if they're coming back, and if they're applicable to you, you should look at them and monitor them. On our website, if you go to our COVID page and our press releases on our website, you'll see that there are some releases that we put together there with links to the various sites that you can track these things. We're also looking at programs that are being put out by not only New York, some of you may be located or based out of New Jersey, and are looking to take advantage of some of those programs in order to allow yourselves to help your business continue to operate. I think we got the, Andy, I'm sorry, but a very important question was posed to you from Alexandra. She'd like to know what song you'll be singing in the interim.
Is there a Passover song that I can sing?
We can start with the 4 questions.
Okay.
Okay.
Luckily, I haven't been the youngest one for quite some time.
Okay.
Look, I could try and talk a little bit about what Pat was going to be speaking about, although he's much more familiar with these other programs than I am.
Yeah. There
You know,
was a special request from somebody in the audience named Logan that we think Dayenu. So do that as, to fill in the time as well. But why don't you start, Andy, and I'll try and meet Patrick separately and see if we can get him back online.
Yeah, that's fine. So there was initially another program called the an Economic Injury Disaster Loan, which was in phase 1 or phase 2 of the litigation. It was a relatively limited program. It's about $10 billion. Frankly, I think it might have already been oversubscribed, but it was a loan that was made directly by the Small Business Administration to small businesses, and it was not a forgivable loan. It was a loan that got repaid over a relatively long period of time with a 3% interest rate. The only way that factors into the PPP loans is that to the extent that you got an emergency injury disaster loan, that would come off. That would be in essence refinanced, refinanced by the PPP loan. I think as we discussed earlier, there's also going to be a substantial amount of money from this $2 billion package going directly to both Treasury and to the Federal Reserve to make direct loans to businesses that don't qualify as small businesses under this current legislation. In other words, they have more than 500 employees. We don't know what that program is yet. There hasn't been any rules or guidelines put out. We expect that hopefully within the next couple of weeks, but we're not sure, when that is going to be coming out. There's also some smaller grants, which Pat was going to talk about, in this legislation, but relatively small dollar amounts, $10,000 and $25,000 type grants. Did we find them, Yariv?
Yeah, I just spoke to him. His wireless connection just dropped. He's trying to dial back in using his phone. Let's see. Oh, there he is. Patrick, can you hear us? Patrick, you're on mute. Can you?
All right, how's that?
Oh, there you are. Hey, it's good.
We were just
Okay.
telling Patrick, you were just telling, we were telling Patrick, everyone, that the first hour for any questions people have, you're doing pro bono.
That's right. That's right. I'm sorry about that. All right, let's start again. So, in terms of the focus. What I was starting to say was, while the focus has been to date a lot on the Paycheck Protection Program, there are in fact a number of other programs that were either expanded or funded as part of both the CARES Act, as well as part of the CARES Act. Actually itself was the third stimulus package, and so there were programs that were made part of the first and second package as well. And in addition to that, there have been some programs created at the city and state level, although that has been smaller and slower to date. So in terms of at the federal level in the SBA, I think it's important to note that in addition to the Paycheck Protection Program, there's also the Economic Injury Disaster Loan Program and Grant Program, which is available to small businesses. And in terms of the Economic Injury Disaster Loan Program, which I'll call EIDL, that's a program which under actually the first stimulus package, the SBA was authorized to make $7 billion worth of loans to small businesses. And really those loans are working capital loans. So loans that can be used to offset lost revenue, and they can be used for items such as payment of fixed debts, payroll, accounts payable, those sorts of things.
Sorry, Patrick,
yeah?
I'm sorry to cut you off. We're getting a question. Can you just again clarify what those costs are? Can they be applied to rent, to mortgage obligations, to payroll? Can you just again let's go through that one more time? We'll be next about that.
Sure. Yeah. So in terms of the EIDLs, it really is a working capital loan. So any type of business expense that a business would typically face, proceeds from this EIDL loan can be used to go towards that. So any type of ongoing business expense that may be faced. So that's what it's meant for. It's a loan where it can be the loan amount can be up to $2 million, and typically it's something with a 3.75% interest rate, and it can be something that's up to a 30-year term. In terms of eligibility, you have to be a small business.
Is there a deadline to file? What are the deadlines to file? Are there deadlines?
Well, there's not a deadline. Although you should look to file as soon as possible. And you do have to meet certain tests in terms of these are disaster loans, so you have to be in a disaster area. New York is considered a disaster area, for example, and you have to be somehow affected by, your business has to be somehow affected by the disaster, and so typically, in addition, there's collateral or a guarantee that's required. Now, it's important to note that under the CARES Act, the third stimulus package, actually, there were certain requirements of this EIDL program that were waived. So personal guarantees for loans under $200,000 were waived. Typically, one of the requirements of the program is you have to show that you have no other no other source of credit. That was waived. And typically, there's a requirement that you have to have been in business for at least a year prior to the disaster, and that was also waived. So those are some of the key features of that program. It's also important to note that under the CARES Act, in addition, there's what are called economic injury disaster grants, which basically act as a $10,000 loan advance for applicants under the EIDL program. And so basically what you can do is, in terms of how you apply, unlike the Paycheck Protection program, where applicants are applying to their lender and where the lenders are administering that program, the EIDL program is one that gets administered directly by the SBA. So if you're an applicant, you're going to file your application online directly with the SBA. A caseworker at the SBA is going to work directly with you in terms of reviewing that application, and then ultimately proceeds coming out of that loan. So as part of that program.
Patrick, I'm sorry, one more question. You said in that case you applied directly to the SBA. Andy, in terms of the Paycheck Protection programs, are you also going directly to the SBA? How do you apply for them?
No. That's a little bit different. The Paycheck Protection Act is basically sort of like a typical SBA loan, where you would go to an SBA lender. The SBA lender will process the application, will send it to the SBA. The SBA will sign off on it. The lender itself is going to fund the loan and will have the guarantee of the SBA in terms both of the ultimately potentially a default by the borrower, if it can't make it and then goes out of business, or if it stays in business but the loan is required to be forgiven, the SBA is going to step in and repay the lender for those forgiven amounts.
Maybe just a practical point for anybody who's looking to apply, it hasn't done so already. You should reach out to your bank to confirm that they are a bank that is processing these loans. Only a handful of banks at most have put their applications online already. But find out if your bank is going to be an approved SBA lender and if they can process them. If they're not, we have been seeing a trend where with a few banks that they've been joint venturing with other banks. In terms of one bank not being able to process them, another one that can. They've been working together to refer the application through the other bank.
Yariv, yeah, I'm sorry. I actually heard this morning, although I've not confirmed it independently, that Citibank is not even going to participate in this program.
Really? That's
Yeah.
amazing. Interesting info. So find out, you should reach out to your bank where you hold your account, because that's where you have your relationship. Find out what relationship you have there, and if that bank is processing. And you should also reach out to other organizations that you're affiliated with to see if they have some kind of relationship level through their organizations with the banks to make sure that your package is processed together with similarly situated applicants. I'm sorry, maybe turning back to Patrick.
Sure. So just in terms of the the economic injury development grants, as part of your application for a loan, you can also apply for these grants, and what it basically would provide is a $10,000 loan advance, which you would then need to disperse within 3 days for payroll or paid sick leave or something like that. The other thing to note about these grants is that if for some reason your application is not approved for an EIDL, then you don't have to repay that. You don't have to repay that grant. Just in terms of practicality, so you would apply for an EIDL through the SBA's website. What the SBA is indicating is that they will look to have a 2 to 3 week turnaround time with respect to your application. So that's the expected timing on that at this point. So in addition to the PPP and the EIDL, there also under the CARES Act, there was about $17 billion in subsidy payments that were authorized to help existing SBA borrowers with respect to their existing SBA loans, whether they're a 7A loan or a 504 loan. Existing borrowers under those programs can apply and to receive a subsidy in terms of helping them pay their existing loans. In addition to that, what I want to note is, and we won't really go into detail because I'm neither Andy nor I are tax experts. I would just note that there are tax credits that were both part of the CARES Act as well as part of the second stimulus package, which was the Families First Act. And basically, there's an employee retention tax credit that's available, as well as a tax credit available with respect to paid sick leave and paid family leave. So at the federal level, there are also tax credits that are available. As I mentioned, at the local level, there has been less done to date, and I think that's obviously just partly a result of the fact that the state government is obviously focused on the crisis at hand. To date in New York City, there have been 2 programs that were announced early on. One was the New York City Small Business Continuity Fund, and another is the New York City Employee Retention Grant Program. And in this case, this was really directed at very small businesses. So in the Small Business Continuity Fund, that's for businesses with fewer than 100 employees located in the 5 boroughs and who had who could demonstrate a loss of 25% or more in terms of revenue. That offered a 0% interest loan with a 15 to 20-year term. In addition to that, there was the Employee Retention Grant Program, which provided up to $27,000 in grant money for payroll expenses for 2 months, but that was for extremely small businesses of 5 or fewer employees. At this particular time, it seems that due to interest, the city has put a pause on reviewing any new applications. So I think at the city level, we're just going to have to wait some time before a more robust set of programs comes out. But I think that this is important to note that we will be seeing those, and so it's just important to keep monitoring this and see what's available, because in addition to what's available at the government level, there have been a number of private funds that have also been announced and continue to be announced. For example, you have Facebook, which announced a program. I believe Verizon announced a program. So there are a number of private funds that have also been created. Now, while in New York, there's just been the 2 programs that I mentioned. In New Jersey did come out with its own set of small business programs that are being implemented right now, and among those, these are all through the New Jersey Economic Development Authority, and as part of that, you have number 1, the Small Business Emergency Assistance Loan Program, and you also have the Small Business Emergency Assistance Guarantee Program. And so with respect to the loan program, it provides up to $100,000 for operating expenses. It's a 10-year amortizing loan where there's a deferral of payments for the first 12 months with a 0% interest rate for the first 5 years, and then an interest rate for the remainder that's consistent with other EDA programs. To be eligible, you have to be in existence for a year, and you have to have less than $5 million in annual revenue. And then you also have to make certain assurances with respect to retaining and rehiring workers. In addition to that, there's the Small Business Emergency Assistance Guarantee Program, where the EDA will provide a guarantee of 50%, capped at $100,000 to lenders who are making working capital loans to small businesses who again meet the same eligibility requirements as part of the emergency assistance loan program. The last program at the New Jersey state level that I'll mention is there's also a entrepreneurship guarantee program, which can guarantee up to 80% and in no event more than $200,000 in terms of investor loans. So if you have an investor who already has an equity investment in a particular business, it can have an additional working capital loan guaranteed up to that $200,000, provided that business has at least 50% of its employees in New Jersey, has less than 25 employees, and has under 5 million in revenue. And so that's again, to date, it's been at the state level. It's been more focused on the crisis at hand. But as things turn towards recovery, I imagine expansion of those programs. The one other program I just want to mention I know this has been focused on small businesses. The one other program that Andy and I have been looking at the federal level is part of the CARES Act. The Federal Reserve was also authorized with respect to up to $500 billion in funding for programs, and it has been working on what they're calling the Main Street Lending Program, which is a program that's going to be targeted more towards middle-sized businesses, businesses with between 500 and 10,000 employees, and the expectation is that will be rolled out shortly, and will be a program that is more targeted to that middle-size company.
Yariv, I just wanted to mention one more thing, which doesn't necessarily have anything to do with the CARES Act or anything that Pat was mentioning in terms of loans or grants, but there is legislation that is sort of wending its way, albeit slowly, at least through the New York State legislature. I'm aware that there's a similar type of bill going through the Massachusetts state legislature to require insurance companies under business interruption policies to pay claims related to the coronavirus, those types of losses. I mean, generally, and I'm not an insurance lawyer, but generally business interruption policies apply when you have a business that has some sort of physical damage, a fire or something like that, and you have to close the doors for a while. Generally doesn't include something like this, but the legislatures are working on this, and the insurance companies would ultimately then be repaid back by the various state insurance funds. Something to look out for.
Yes, and that goes right back to what we said earlier, Andy, about one of the things that we were engaged a lot with our clients is to look at the insurance policies to see what coverages are available. Definitely an additional step to be watchful for that can be very helpful. We're almost out of time. Kind of last chance to ask any questions you have, or to again do like this with your hands. If you have any further questions, let us know. Going once.
Yes, this is Marcus Rayner. Who did you say would be reimbursing the insurance companies under if that legislation goes through?
Yeah, my understanding is that at least with respect to New York, that it would be the New York State Insurance Fund.
How stable and how large is that fund?
I don't know that. I don't know the answer to that question.
Any other questions?
We could certainly, Yariv, we probably should ask Alan to respond to that. He's got more ability to do that. But this is what he and I actually spoke about this last week.
And what's your view on the likelihood of it passing, that legislation passing?
I don't know. I know there was also legislation going through the state Senate on rent and mortgage forgiveness. With respect to both commercial and residential apartment buildings. Certainly, nothing's come out, and I know that was pending at least 10 days ago.
I was going to ask you about that. It seems to have ground to a halt. Do you know the reason for that?
Do not.
If there are no other questions, and I don't see anybody sending anything through the chat, we'd like to really thank you all for filing in and letting us share our. If you have any further questions, you can look at our website on the materials we have posted. Feel free to reach out to me. Feel free to reach out to Andy or to Patrick, and we'll do our best to help you out or to guide you to the right person at our firm or assist you. We hope you all have a wonderful holiday season, that you're all healthy and safe, and we look forward to seeing you all in person in the very near future. Thank you, everyone.
Thank you. Bye-bye.
Thank you.
Thank you very much.